And that beta version was compromised. We didn't implement our end-to-end encryption properly. There were some backdoors. It just overall, the product was hacked.
Welcome to Growth Under Pressure. I'm Eric Josovitz, founder of Adapt CFO, here to pull back the curtains on what it takes to scale fast. From near crisis moments to epic turnarounds, the leaders of the fastest growing companies in the US unpack the solutions that got them through their toughest moments. Ready? Let's get started. Tanner, thanks for joining me today. I already know a lot about you and your background, and I understand how you've been able to grow under pressure. So let's dive into your story. Sound good?
Sounds good. Thanks so much for having me here.
Of course, of course. So take us back to day zero. What problem were you obsessive enough about that it made you start Freedom Chat?
Well, we met from a previous company I had. It was called Zeek SEO. It was an online marketing, website creation, and design firm. And we had dozens of clients, and a few of them were in the conservative space. So we managed those websites. I would look down and I'd see some of these comments. And some of the comments were deeply concerned about the invasion of privacy that's going on. And they'd say, oh, government's listening to them. No, these apps do this, they do this. And I was like, okay, let me actually look into this myself. And when I looked into it, the amount of data that these apps collect, the amount of unencrypted texts that are sent each day, the amount of people's lives, quite honestly, that are ruined because an image or video gets leaked. That was enough of a pull where I'm like, okay, let's do something about it. So I talked to 5 people. I called them. I said, I'm thinking of starting this private messaging app that will be able to prevent screenshots, media from being saved and then encrypted. And we're going to rely on users' memberships rather than exploiting user data. What do you think? Is that a good idea? And all 5 were enthusiastically saying yes. And all 5 actually turned out to be investors. So right off the bat, we were, okay, let's do this.
Great. That's obviously a pain point for many people. We've been working together for a while now. So I have some insights into, where you started, and it's great to see how you've been able to scale and push through those challenges. Give our listeners a little bit of team size, user count, downloads, active downloads, if you can share, and what the current round looks like.
So Freedom Chat we raised a $1.25 million pre-seed round that allowed us to get the product to market, validated the proof of concept. We've established some strategic partnerships with some of the most high-level influencers and brands in America. We created a truly private messaging app with the ability to edit, unsend, self-destruct messages. Users can also, they prevent screenshots, free recording. Each message is end-to-end encrypted. And beyond that, we have an encrypted analysis on our website, a white paper. So really the pre-seed was, let's get the product to market. Let's validate the proof of concept. And we successfully did that. And now we're raising a $4 million seed round. We've raised roughly 1 million of that. To date, from our previous beta launch to now, we've had over 25,000 downloads. If you want to count our previous beta launch, that's called that, we've had over 50,000 downloads. So the concept's been validated. We're weeks away from launching our alpha product, and that encompasses all of the feedback we received the past 2 years and put this on par with what I believe will be able to compete with the largest messaging apps in the world. We're as user-friendly with more privacy and security-focused features, and then a business model that enhances user trust. And we're just getting started on what I think is an ambitious mission.
Awesome. Well, that gives us scale. Let's rewind to your first oh no moment. Tell me about the single highest pressure financial moment you've faced so far. What triggered it, and how did you dig out?
In regard to Freedom Chat, correct?
Yeah. If if you want to rewind and go back to Couture Nutrition, I'd love users to hear about that story.
So I'll talk on that, and then I'll get to Freedom Chat because I think the two kind of coincide. So my first company, I started my first company when I was 18 years old. I launched that. I moved to Miami to start it. I wanted to put my back against the wall. I was jacked up on motivational books and motivational videos. I'm going to do this. So I moved to Miami. I wrote a book to really fund the company. It was called Art of the Goal. It was a bestseller for 1 month in the motivational category. I then wrote another book. So that was really the seed money for Fattori Nutrition. And then I realized I did not know what I was doing. I was 18 years old. I was like, this doesn't work. And we were selling protein powder. If I had met you then, Eric, you would have really helped save me a lot of time and money because I didn't realize the economics of the business. For example, it cost me $25 to make a protein powder. Shipping was $15. Sell it for $39. I was losing money on each purchase. Business model, it just didn't work. I did not think it through clearly enough. It's a saturated market. So what did I do? I'm not going to give up. That's not what a real entrepreneur does. It's not who I've been reading about. These biographies, they never gave up. So I got an Uber job on the side. I drove Uber, basically working 12, 18-hour days, driving Uber the rest of the time. I didn't sleep in my bed because I didn't feel like I deserved it. And I just ended up pivoting the company. I learned enough about online marketing where I approached an investor in Colorado. I said, look, I know how to online market. I've spent so much time, energy, and effort learning Facebook and Instagram ads, Google ads. These products don't work. So I ended up selling all those products, basically $150,000, $200,000 worth of inventory, sold it for just $10,000, moved back to Colorado, put that $10,000 into a little stress relief supplement, which is cheap to make, cheap to ship, and I could sell it for $45. And that company ended up selling that version of Fattori Nutrition ended up selling 6 months later for $2.5 million. So I went from Uber and oh crap, I just lost everything. I don't know what I'm doing to persevering a little bit, finding the right investor, selling that company 6 months later.
Amazing, amazing. I want you to tell us about Freedom Chat, but before we go there, do you think that it was integral to sleep outside of your bed and put that pressure on yourself to get to a place where you could turn things around and ultimately sell the business?
I I take it personal when any one of my businesses, this Freedom Chat's my fourth one, when any of them are not doing well, I take it personal. It's an extension of myself. If they're not doing well, I'm not happy. I don't sleep well. So this was just like, I'm failing in my mind. Why the hell do I deserve a bet? And that's honestly my thinking. Sounds crazy, probably is a little bit, but I just didn't think I deserved it. And then once the company was on sounder footing, especially once I sold the company, I was sleeping a little better. Um, I don't, so it's a cork, I would say.
Yeah, well, I think every entrepreneur that's successful has some level of crazy built in. Um, but you turn things around. So tell me a little bit about Freedom Chat. What is like that integral or pivotal moment or high pressure financial moment that you faced and how you turned things around, brought Freedom Chat to where it is today.
Freedom Chat is by far the most difficult company I've ever started. It has the most, you have to pay, I mean, every detail matters. And as you know, we launched our beta version. Um, and this was probably 20 months ago. Took off 30,000 downloads, 30 days. Holy crap, we're doing it. We're doing it. No, we're not. There were some security vulnerabilities. We rushed the product to market, and there are levels to an MVP, a minimum viable product. You cannot just rush anything out to market. There are things you need to do, especially when it relates to people's security, safety, anything like that. And that beta version was compromised. We didn't implement our end-to-end encryption properly. There were some backdoors. It just overall, the product was hacked. And that was a very dark moment. And there was a decision to make. You either quit and lie down, say, poor me, and that's it. Or you say, okay, I'm going to learn from this. We're going to challenge this. We're going to harness this, and it's going to make us better. And I'm a huge fan of Theodore Roosevelt, and that's exactly what he says is, I mean, it's called the man in the arena speech. And we were getting, I mean, so much bad press. Oh, look at this. What is he doing from a nutrition company starting a messaging app? Or why is he from a marketing company? And that's the man in the arena speech. Is the credit belongs to the person who's getting kicked in the face, who's bloodied, who's dirty, who gets back up time and time again. It's not the people that point out how the strong man falls, but the one that gets up. And so honestly, I we positioned the company, we pivoted, changed the name, brought in the correct individuals. I removed myself from a development role, and we've taken our time creating the best, most secure product possible. And that's what this alpha launch is going to be in roughly a few weeks from now. And since that dark moment when our cash was dwindling, I say dwindling, never again was it that at that low of a point. Since then, we've raised 1.5, almost $2 million since that point. It's just made us stronger. This is how you create a product. Things are going to take time. You can't rush it. And just be more meticulous. The product matters. You can't claim something if you haven't actually thoroughly vetted the product can do that. And it really did make us stronger. And looking back on that, it's going to make one hell of a story when we sell this company, Eric, or where I want to take it, we go public. That look at that moment. I think there's 99% of people would have quit after all that bad publicity, after that hack, and we just didn't. The team put their head down. We reorganized, made some changes, accepted the blame, and then got better.
Absolutely. And I completely agree. As you know, we had a lot of conversations at that time. Before we move on, take me back to that dark time. That I have a thought on how to get out of those tough moments, but I want to know what your opinion is. Do you take off a week? Do you take off some time? Or do you stay in it and work overtime?
I I don't believe taking off a week is ever going to solve your problems when the problem needs to be solved by working harder and persisting more. I usually, and I remember this was not, I didn't give up my bed, but I went on and I laid on the upstairs floor, didn't have dinner. I just sat there and had all these dark negative thoughts in my mind. And I know I told you about this and we talked. I'm like, I'm just not in a good place. And sometimes you need somebody who has been in that position, another entrepreneur who understands. And I think, you know what, 30 minutes to 2 hours of grieving, of saying, poor me is okay. And then you say, all right, back to work. I'm going to make this happen. We're going to make this happen. 1 week of I'm going to go take a vacation. I'm so stressed. You're stressed because you're not working hard enough or you're not doing a good enough job. So you don't deserve a vacation. I did not deserve a vacation, but 30 minutes to put things into perspective, to realize, yeah, I screwed up. We screwed up and we're going to make it right. I think that's okay.
Yeah, that's valid. That's valid. So talking a little bit more about cybersecurity, you're in privacy, cybersecurity, messaging app space where compliance mistakes can be expensive really fast. So
Mhm.
looking back, which one decision had the biggest impact on cash flow or margins or any other metric like runway that you want to speak on?
Um, I'm thinking, I'm not ignoring you.
Yeah, no, it's okay.
Honestly, do things right from the beginning. We've saved a lot of cash. If you try to rush things, then okay, instead of 3 months, we're going to get out in 2 months. But then that 2 months turns out that you actually have to go back and fix things. Now that adds an additional 2 months. as opposed to this is how long it's going to take. If it takes longer, it takes longer. We're going to get it right. That's the approach we've taken since that event. And it's honestly, yeah, we'll spend some cash, but it's going to conserve us cash in the long run because you want to set a firm foundation. That's the same thing I did with my nutrition company is I dove into it head first, didn't think to consult people that know more than me, have been in the space before. And honestly, if you're a go-getter, if you're an entrepreneur that I want to start this and the next day you're starting it, sometimes the best thing to do is actually slow down a little bit, think it through, consult with people that have a different perspective, have been there, have a different area of expertise. So the best thing that we've done for Freedom Chat is slow down, set the foundation right, spend less on marketing, more on the product. And then once the product really takes off and explodes, like I know it will, now let's plow some into marketing, but only once you actually have a product that is worth paid marketing, essentially.
Yeah. And I see that all the time where marketing spend is multiple times more than product and R&D. And then they have to, deal with the churn. People don't like the actual product. So it obviously makes sense to perfect it first. And it's a balance, working with so many different CFOs. I see some are like, just throw the money, just throw it into the fire. And then, working with you, you're like, look, man, every dollar counts. We're gonna be like, you're gonna be looking at the bank account and making sure it's controlled and things aren't out of control.
That's the other thing is the CEO, and this sounds embarrassing that I've ever done this, but like my nutrition company, and then I had an online autism test. Sometimes when the business is going very, very poorly, you want to stick your head in the sand, meaning you don't want to look at the bank account. You don't want to, that's when you need to look at it closer. You need to be acutely aware of every single expense. And I know I brought this up to you. There's a $39 charge that I don't like. We're stopping that charge. I know every single dollar that is in and out of the company, and that's how the CEO should be. You can't offset it completely to a CFO. The CEO themselves, any entrepreneur, you need to know every dollar that goes in and out of the company. And obviously there's levels. If you're a $1 billion company, you can't know the smaller, I mean, what comes in and out, but you really need to have a 360-degree view of the company's financial performance. You need to know like the back of your hand.
Yeah, that's definitely true. And sometimes I think you can be a little bit more meticulous than even I can be, which is crazy. If in my experience in finance and accounting. But yeah, it's absolutely true. So at what point did you realize that spreadsheets weren't enough, and what finance or operation controls did you put in place?
Uh, I mean, having you and your team has been instrumental, but it's the same thing with the business. Like things look pretty on paper. You can have a beautiful business plan, but it's the execution that matters. We can have the numbers, we can finagle the financials to look any way we want. And I think that's what I wanted to do early on is, oh, we can do this, 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 but things rarely go according to plan. They take longer than you think. They're going to be more difficult than you think. So it's, yeah, make a plan, stick to the plan. I think expenses are much more predictable than income, but you also just need to be very flexible that, okay, we spent a little more because that took longer. Now let's repivot. And so it really, spreadsheets have a place in it, but you need to roll up your sleeves literally and figuratively and just get into the nitty gritty, understand what money comes in, what money goes out, and adapt accordingly. I think a lot of CEOs are so flexible, are not flexible enough in the sense that, nope, our budget's this, our budget's this. Well, if the product needs more dollars and it's going to save you time and money in the long run, then you need to shift and allocate more money towards that, or just bite it. That is going to take a little longer, put more money there, but don't spend money on stupid stuff. That's just ridiculous.
Yeah, yeah, that's a great point. And you felt you needed to lean on a finance expert or a team that could drive that value or answer those decisions for you quickly.
Yeah, and provide a different perspective. It's different when you're the CEO, especially an optimist, as most entrepreneurs are. You think this is going to happen because I'm going to will it to happen. Well, yeah, maybe in the long run, but initially it's not going to work like that. So you need somebody to actually go through the numbers, be a little more pragmatic than you would be, and then lean on their experience and expertise and craft a plan, help you execute the plan, hold you accountable to the plan. So yeah, definitely can't do it alone.
Perfect. Now, Freedom Chat raised outside capital early. Knowing what you know now, what would you change about your first funding round?
Put more into the product, less in marketing. I mean, we clearly validated the proof of concept very early on. There was no need to put more money into marketing because things take time to build. Test the concept with as little dollars as you possibly can, and then finish building the product. And then once you have some organic growth, that means your users have said, yeah, this is a real product. Now you can put more money into marketing. So honestly, with our raise, I mean, it's gone well. It's taken longer, especially in the space we're in, but put more into product. And honestly, you can get by with less than you think if you do it right from the beginning. Set the firm foundation. Don't try to rush it because you want to, oh, we're going to grow this. Like just take care of one thing at a time, slow down a little bit, get it right.
Yeah, I feel a lot of times CEOs will try to appease the investors or go to market really fast and use the money, um, put it to use right away when
Mhm.
sometimes the idea is go back to the drawing board, like really just hire really slow, make
Mhm.
like just, vet those people. I'm sure looking back now, there would be some people that you would just dive a little deeper into
Oh,
background
for
checks
sure.
and their in their history. Um,
What you said though is perfect because like you raised $1 million. You don't need to spend it all. Like if you just can't find, it's like Warren Buffett, he's sitting on $350 billion right now. If you can't find somewhere to properly allocate the money, don't allocate the money. Like if you're okay, this approach isn't working to product development, then conserve the cash, go back to the drawing board. Don't just try to spend it all because we raised this, we have to spend it. That is the wrong approach. That's something I did with Victoria Nutrition. That's something I feel like I did early on with Freedom Chat. We rushed the product to market. Oh, we have this money, we have to spend it because we have to show something. No, we have cash sitting on the sideline. We're getting it right when we feel we can properly allocate it, which is going to either increase our user base, improve our product, add financial returns. Then we will put that money to work.
yeah, absolutely. And with the fundraising rounds, obviously, raising this current $4 million, can you speak on when it's the right time to raise? Do you feel this last round maybe late, maybe too early?
Mhm.
How would you do things differently if you could, or what takeaways do you have from this last round that we just started?
I think everybody has this idea that they're going to raise money. They're going to raise 5 million, 10 million, 100 million. It's going to be an overnight thing. It's going to be 1 month, 2 months. That is so rare. Usually it's a drawn out process. Your job as an entrepreneur is to bring that into a reasonable time frame. I think there's a time and place in your raising strategy. Like, for example, when you're going after individuals, I think you can establish a connection. You can explain the vision more clearly to them. It's less of the numbers. It's more of this is our team. This is where we're going. That's how we primarily raised our $1 million. And then once we launch our alpha product in a few weeks and we gain some significant traction, other firms, investors can go use the app. That's when I think we'll have our most leverage. And then we'll attack the raise hard. So it's the same thing with if you have $1 million, you don't need to spend it all right away. Same thing with raising. If you have all these connections, don't utilize them all the way or immediately, because then you could, I mean, basically just throw away a connection because you were so rushed to raise money, even though that, hey, if we waited 2 months when our product was better, our team was better, we had more traction, we have a much greater probability of closing them.
Yeah, it definitely could soil the relationship. Timing is everything. Of course, there's no perfect out of the box solution. That's just not,
Mm-hmm.
it doesn't work like that. There's no guide that says you need to raise exactly 6 months and 2 days after your last round, but it's really a feel. It's forecasting it, right? It's making sure that
Mm-hmm.
you're planning it, and nothing ever goes as planned in the startup world. Let's just be
No,
real.
you can.
So
I think you can plan your expenses reasonably well, um, but be flexible. Be willing to. Okay, we need to just eat this cost. It's going to be a higher month, or we need to allocate it somewhere else. Income, even raising, because you're dealing with. I mean, from an investor standpoint, or from a entrepreneurial standpoint, you're dealing with individual. Somebody could say they're putting in 1 million. They're finicky. I mean, it's emotional. Sometimes it takes 6 weeks to get a check after somebody says they're in. Sometimes it takes 6 hours. I've had both. I've had some that said they're in, they sign their docs, and then they pull out. And as you just have to be ready for everything until you have the money in the bank. And then actually, I honestly think until 2 weeks after you actually have the money, because we've gotten the check from somebody and then it bounces. I'm like, oh, until you have the money, you don't have the money, literally and figuratively.
yeah, not a lot of people have issues with the bank either, but we have some stories on that as well. We'll save that for another day. But
Next episode, Eric, episode 100.
episode 100, I love the we'll put money in once the majority of the round is raised.
Mm-hmm.
It's like an elephant in the room that founders don't always talk about, but I feel that every single entrepreneur that's raising in the startup world goes through that
Mm-hmm.
comment.
And I
Um,
mean, that's like, if you're like you're in the dating scene and you try to find a girlfriend, and I have a wife, but it's like, oh, I'll be interested in you once you're rich and successful. It's like, whoa, you would do them like, I need you now. And in the startup world, like, we're raising, no, I need you now. No, we'll come back to you when you've had the majority of your round raised, or you like, okay, but that's the way it is. And then you go to people that are willing to take more of a bet now, uh, and maybe those people lose their position because you don't need them. And sometimes that happens, but you just have to keep plugging away. And just because somebody says no or says not at this time, honestly, no never truly means no in the funding space. I have followed up with people a year after, months after, and sometimes they come around and say, you know what, fine. So you'll stop bugging me.
yeah, it's really the chicken and the egg situation. Fast forward when you're, multiple billion-dollar valuation, you look back and you're like, I remember I had that conversation with that person that didn't want to get into the industry or wasn't sure about the company if it had the ability to scale, and then it's like, oh, that was a no-brainer. Why didn't I invest? But easier said than done, right?
Hindsight's always 2020, or really, like, I mean, everybody has perfect vision looking backwards.
Yeah, yeah. So you're still sub 100 employees. Have you leaned on fractional specialist, CFO, HR, legal, development, or gone straight to full-time hires? Why? Tell me a little bit about that.
Uh, we have definitely leaned on fractional. And I think that's the way to go as a startup. You can get a lot more bang for your buck than you think. Don't eventually go to, or don't right off the bat, don't go to full time employees, because you can have some, but there's going to be a lot of times where if you try to hire like a full time CFO or a full time CMO, or that they'll be twiddling their thumb and you're still paying them a salary. So when you leverage fractional, like a CFO, adapt CFO, when they can take care of your accounting and your financials, they're there when you need them. They're make sure everything gets done, but you're paying for results. You're not paying for their time. And there's two different things. You want to pay for experience and skills. You don't want to pay for somebody's time. So as a startup, I think it's important to have a few employees that this is their whole life. And then you need to leverage fractional because you can often get more talented individuals and leverage not just one individual, but their whole organization, which really reaps dividends immediately and in the future.
Yeah. And I think historically that option wasn't available. You would have a startup with a bunch of generalists that wore multiple hats. And nowadays you can hire fractional or, part-time resources in a firm, or, someone like Adapt CFO. Of course, I won't drink my own juice right now, but it's, I'm definitely a big fan of it. And yeah, you don't pay for PTO or benefits or, time where someone goes and takes a walk or, is on YouTube, scouring
Yeah.
the internet.
Yeah. You pay for results and only results. And that's important as a startup. Every dollar matters. So
Yeah.
100% agree. I'm a fan of that. Something I didn't utilize in my previous 3 companies, and I definitely could have. Lean on people that have more expertise than you. You have to hire people that are better than you, but hire doesn't mean full-time hire. It means you can also leverage fractional work as well.
Yeah. So right now, Freedom Chat, if I'm correct, has more fractional specialists than full-time employees, right?
Yeah. And I think that actually works better that way because again, you're paying for results. It will take care of your health insurance. You get paid time off. No, you come work, you do your job, and we'll keep using you. And it's a cash-based system. Sometimes they take equity,
Yeah.
but you don't need to pay taxes. You don't need to pay for all these extra benefits. You pay for the work that gets done.
Yeah, I think we pay up to 30% additional on top of salary and hourly costs. So it it definitely, there's a time and a need for
Mhm.
both. Um, so I see both working out. But tell me real quick, what looming risk keeps you budgeting extra buffer right now? Market, compliance, tech, obviously with the tariffs that, Trump's implementing, all the economic government changes,
Mhm.
the market for cybersecurity messaging app. What keeps you up at night?
Um, the product. I mean, getting the product right takes time, and I always think conserve more cash than you think you'll need because eventually then you'll need more cash than you thought you needed. Um, so I mean, I'm pretty frugal in the sense like don't spend on stupid stuff. Yeah, there's time to be aggressive, but you also need to think of the alternative that, yeah, we could do this, this, and this. We get this many users, then we raise this amount. Yeah, but you also have to consider the alternate reality, as I call it, that you could do this, get a bunch of users, spend all that money, but no additional funds come in. And now what are you doing? So you have to sort of balance both of the what I want to happen versus the what the worst case is versus, okay, what's actually a realistic possibility, and then assign a number percentage to that. Don't just go out spending again just because you have it. Like sometimes black swan events do happen, and these tariffs that I mean they don't impact us, but if they impact an investor and now they're conserving cash, now they're not dispensing it as freely or as willingly as they would before. Individual investors, their stock portfolio is down. Okay, they're not going to invest as I mean, there's always that's just you never know what could happen as a startup. And your main job is to make sure there's cash in the bank to keep operating and just stay alive another day.
Yeah, and it could be a VC fund that has companies go out of business,
Hmm.
and they just change the way they're doing things, and they're not investing, they're holding cash. And you see this a lot on the downturns where companies go out of business when something happens to the market or the economy, and they're like, no one's going to give me additional money. I can't
Yeah.
get debt. I can't get equity.
And
There's
they spend
nowhere
too
else.
much.
Yeah.
But there's also companies that use that, and that's the time they grow because they were a little more conservative when everybody else was guns a blazing. Um, and so I think there's opportunity, but you just need to be prepared in the startup world that anything can happen. Your job is to conserve cash, and yeah, you can grow and you can be really focused on growth, but you don't want the train to stop and you're not prepared.
Yeah. All right. I want to get into my favorite part of this. We're going to do a rapid fire 3 questions. The first one is going to be awesome for you because you read a lot of books. You're an author. You've written multiple books, and I love hearing your favorites. So, favorite leadership or finance book you gift most. I'm not going to limit you to one because you've got a ton in your back pocket.
Um, My first and foremost recommendations for people would be just honestly biographies of people you like and admire: Theodore Roosevelt, Elon Musk, Steve Jobs. Because when you read them, you also realize that they're an individual just like myself. They didn't have it figured out at the time. They struggled. This is what they did. This is how they treated people. This was their work ethic. Um, but two books that I think are incredibly interesting and apply to today. One is called The Power and the Money. It's the epic clashes between commanders in chief and titans of industries. And that basically is the history of the US from every business titan. So Rockefeller, Carnegie, and how they dealt with an like the president of the United States. And it applies from, I mean, Henry Ford. It just very interesting applies to today. So that's The Power and the Money, the epic clashes between commander in chiefs and the titans of industry. And the other one is Money, and it's by David McWilliams, and it's actually like a story of humanity, how money came into existence, what is money, and he has a super interesting take on the crypto space. A lot of people call it cryptocurrency, but is it a currency? Because in order to be a currency, it has to be freely tradable. It is freely tradable, but it can't be as volatile as it is. Um, is it a crypto asset? Well, it's backed by nothing. So that's a very, very interesting book. That's Money, Story of Humanity by David McWilliams. So biographies, those two books. But honestly, just keep learning. Everything can be learned through reading. Yes, you need to actually implement it, but I mean, the people that run the world are the smartest. That's how it is, or they work the hardest.
Awesome. Awesome. One KPI you check every day or week before coffee.
Um, I always make it a habit to check the bank account first thing in the morning. Always checking that. And then honestly, just it wouldn't really be a key performance indicator, but making sure I check in with our developers very early in the morning, make sure everybody's on schedule. How are things going? Any feedback, questions? Um, Look at the cash, look at the products, stay on top of people. And yeah, it's true that great people don't need to be managed, but as the CEO, you're supposed to set the strategic vision. So you can save a lot of time if you just make sure this is what I see, what do you see? And now let's come and build that rather than just, hey, do this, give them no guidance, and then you give them feedback at the end of it when you could have been with them through it.
Great. All right. Complete this sentence. A founder under pressure should always.
Persist and work harder.
Awesome. Awesome. Tanner, always a pleasure speaking with you. I can't wait till episode 100. We do this again. We're obviously going to be talking between then, but thanks for coming on. Always a pleasure.
Thank you so much for having me, Eric.
All right. Till next time. That's it for today's episode of Growth Under Pressure. I'm Eric Josovitz from Adapt CFO, and I hope these insights help you tackle your biggest scaling challenges. If you want to help other founders find the show, give us a quick follow or a share. Thanks for listening, and I hope to catch you next time.